Hi there, welcome to Kneppy Invest. Time for another buy, hold or sell video. And in this video series, I'll just go through three significant factors that I do look at and determine whether a company on the ASX is a buy, hold or sell with these three factors. I have chosen one company in the ASX 300 at random, and I made sure this company was producing revenue, was profitable, and that company I did choose at random is Oz Minerals. Now I'm very excited to be doing this company simply because I have never looked at this company in the past, and whenever I do initial research on a company, I can find some surprising things in there. And one of the reasons I haven't done really much research on this company is it is a large miner, and one of my biases is against large miners because I don't think there's much growth in the future for most large miners. So we're going to see if that bias holds true in this video. So what are these three factors I'll be looking at in determining whether Oz Minerals is a buy, hold or sell? Those three factors are financials, valuation and sentiment. With the financials, I'll just be looking at the current year financial year numbers and just looking at how this company has performed over the past 10 years. Is the revenue growing? Operating cash flow growing? Profit growing? Or is it going backwards? And for me, that's very important to see growth in revenue. And if I don't see growth in revenue, immediately I won't have a buy for that company. So I want to see growth in those factors over the past 10 years. Now, it doesn't have to be continual growth, but I want to see some growth in there. Valuation is just determining where the share price increase or decrease potentially of a company is attributable to financial expansion or multiple expansion. If you don't know what multiple expansion is the P ratio going up through time? Or another way to look at it is, do you have to pay more of a premium now than you did 10 years ago? I prefer no multiple expansion happening in a company's share price increasing. And the last one is sentiment. And sentiment's fairly easy. All you have to do is look at a chart. Is the share price going up or down? Or in other words, is there positive sentiment in a company or negative sentiment? And I'll be looking at two time frames, a weekly chart and also the daily chart. So let's get stuck into it. And the first thing we'll be looking at is the financials of Oz Minerals. But before we look at the financials of Oz Minerals, just a few facts in regards to this company. Now, I did know Oz Minerals was a miner, but what exactly it mined was new to me. This is a gold, copper, and silver miner. Now, I am fairly bullish on copper long term. Gold, fairly neutral, and silver, particularly if gold goes on a run, sometimes won't go on as much as a run as gold, and you can see some value in silver at times. Oz Minerals was founded in 2008 through the merger of Oxiana and Zinifex, and Oxiana actually listed on the ASX in 1970. So a complicated history when it comes to Oz Minerals, but it was a merger through two companies. The current CEO of Oz Minerals is Andrew Cole, and he's been in that role for over 7 years or nearly 7 years. And I do like to see a CEO who has been in that role for a long time, because more than likely, if he's been in that role for 7 years, he's been doing a good job. So that's one good positive for Oz Minerals and Andrew Cole, who has been CEO for 7 years. Shareholders, the major shareholder or the biggest shareholder of Oz Minerals is the Dimensional Fund. They have a 5% stake in this company, so not a large stake. So Oz Minerals is, you can say, spread evenly throughout a lot of funds around the world. So I did notice that there are quite a few fund managers in the United States, Europe, who do own a little bit of this company. And the market cap of Oz Minerals is currently at 8.7 billion. That's at a share price of $26.03. That was at end of trading on November the 19th. And the ticker code for Oz Minerals is OZL. Now let's have a look, finally, at the financial state of this company. Oz Minerals' financial year coincides with their calendar year, which means their financial year 20 finished on December 31st of last year. They have released their first half results for the current financial year, and I'll show you those results in the next slide. But in this slide, what I'm doing is comparing financial year 20 numbers to financial year 2011 numbers, which I have given you in the brackets in this slide. And what I want to see here is any sort of growth over the past 9 years. Now, there is one slight problem comparing 2 years in isolation, because we don't know what's been happening in between. And this will become clear why I'm talking about this as we go through the rest of the video. Because what I want to see here is growth in revenue, growth in profit, and growth in operating cash flow. And we haven't seen that with Oz Minerals when you compare 2011 to 2020. For instance, revenue has grown from 1.1 billion to 1.3 billion, but profit and operating cash flow have both gone backwards over the past 9 years. Profit's fallen 62 million to 213 million, and operating cash flow has fallen nearly 100 million to 550 million. One thing that has really increased over the past 9 years is capital expenditure. It's grown from 116 million to 563 million. Now, I want to find out why that is so. Now, one thing you will see when a miner has another mine coming up to production, they're getting ready to bring that up to production, you will see a bit of an expansion in the capital expenditure. So that is a possibility for Oz Minerals. I don't know, because I haven't gone too much depth into researching this company just yet. Oz Minerals also has $30 million of cash on hand. And when you look at some of the valuation metrics, they do seem a little bit stretched. For instance, price to the PE ratio is at 40.8, which is fairly high for a mining company. That could be telling us either there's a little bit of hype in this company and the market might be expecting some significant growth in the future. So they might be expecting profit to expand quite significantly over the next few years. Or there could have been a one-off that has brought the net profit after tax down in the previous financial year. And price to book ratio at 2.7 is fairly high for a mining company as well. Now let's have a look at the first half results for financial year 21, and we will see some significant growth in the first half of the current financial year. And what I'm doing in this slide is comparing the half-year results to the full-year results in the brackets for financial year 20, just to give you some perspective of how good the first half of this financial year has been for Oz Minerals. For instance, revenue for financial year 20 was 1.1 billion, but for the first half of this financial year, revenue for Oz Minerals was almost $1 billion. So it's almost identical to the full year results the previous year. Gross profit margins have increased from 38% to 48%. Profit after tax is actually greater for this half year than it was for the full year financial year 20, up to 269 million. Operating cash flow, not quite as high as the full year, but only $100 million short of the previous financial year. Capital expenditure still fairly high at $276 million for the half year. Net cash has increased to $134 million because they have produced a lot of cash in operations. They've also, because of that amount of cash they've produced in operations, have paid down some of the debts, and that's why net cash has increased during the last half year. PE ratio has come down a fair bit. Now, the PE ratio is based off the trailing 12 months. So it's gone from over 40 to 21.7. So it seems like the market was expecting some good growth with Oz Minerals, and that's definitely happened in the past half year. And price to book ratio has come down a little bit from 2.7 to 2.5, but still a little bit high for a mining company. Comparing 2011 to 2020 is a little bit unfair for Oz Minerals because we don't know what's been happening in between those 2 years. So what I've done here is just looking at the last 10 years, in fact it's 9.5 years, of revenue, profit and operating cash flow, just to see the journey Oz Minerals has gone through over the past 10 years. And if we go back to 2011, or the period between 2011 and around about 2016, Oz Minerals wasn't really performing all that well. Everything dropped during that period. For instance, revenue dropped from 1.1 billion to 823 million. Operating cash flow fell from 650 million to 324 million, and profit fell from 275 million to 108 million. But things have definitely improved for Oz Minerals over the past 5 years since 2016. Everything is starting to grow again. Revenues increased from 823 million to 1.8 million in the trailing 12 months. Operating cash flows increased from 324 million to 857 million in the trailing 12 months, and profits increased from 108 million to 401 million in the trailing 12 months. So everything's going really good for Oz Minerals over the past 4.5 to 5 years. And if we break down the growth rate of revenue, profit, and operating cash flow, we can see some growth in all these three financial metrics over the past 9.5 years, and definitely over the past 4.5 years. The growth rate has definitely started to accelerate. For instance, over the past 10 years, revenue has grown at 5% per year, but if you just look at the last 4.5 years, it's been growing at 8.3% per year. Profits grown from only climbing 4.1% per year to 15% per year over the last 4.5 years. And operating cash flow is right now growing at 11% per year over the last 4.5 years. So just based off the growth rate in revenue, profit, and operating cash flow over the last 4.5 years, this does look a little bit more attractive if you just look at that period of time instead of looking at the whole 10-year history of Oz Minerals. I'm very close to putting a buy just based off these numbers, but I'm just going to resist putting a buy and maintain a hold for Oz Minerals based off these numbers. On to looking at the sentiment, and with the sentiment we just have to look at the chart, and the chart will tell us everything. We'll look at the weekly and daily charts. First, the weekly chart here going back 10 years to 2011. And just remember that period between 2011 and 2016, Oz Minerals was not really performing, and you can see that in the chart of the share price for Oz Minerals in that period. In fact, the share price fell from about $17 to a low of $3, which was reached in 2014 and 15, just before we started to see the financial state of this company improving. And then the share price has followed how this company has performed over the past 5 years. In fact, the share price has increased from that $3 to a current share price of $26. That's a 9-fold increase in the share price over the past 5.5 to 6 years. So without doubt, looking at the weekly chart, a lot of positive sentiment behind Oz Minerals right now, particularly since the bottom of the COVID-19 financial panic when the share price got down to $6. We've seen the share price increase 4-fold over the past 18 months. So definitely positive sentiment behind Oz Minerals right now, just looking at the weekly chart. Now let's have a look at the daily chart to see if that positive sentiment is in the day-to-day trading of this company. Definite positive sentiment when we look at Oz Minerals' weekly chart, but do we see the same sort of thing in the daily chart? And this goes back at almost exactly 1 year. And without doubt, there was positive sentiment for Oz Minerals from November last year to around May or June this year. In fact, the share price reached a high of about $27. I don't think it's an all-time high, because I'm pretty sure during the GFC, or just before the GFC, the share price of Oz Minerals was fairly high. But after that high of $27 in May of this year, share price did drift back a little bit and then went sideways, so a little bit more neutral during that period between May and around October of this year. But it does seem recently the share price of Oz Minerals does want to go for a little bit of a run. It does look like it's moving into a new uptrend, just a potential new uptrend right now. But if the share price can break above 27, I think that will confirm a new uptrend has developed in Oz Minerals share price. So not as bullish as the weekly chart, but definitely still some positive sentiment right now, potential positive sentiment, we'll say, with Oz Minerals looking at the daily chart. So overall, if we look at the weekly and daily movements of Oz Minerals share price, we're going to have to put out a buy just on sentiment alone. The last thing I want to know in regards to Oz Minerals is what has been driving the share price higher over the past 5 years. We already know there has been some financial expansion happening. We know profits been increasing, operating cash flows been increasing, revenue's been increasing. But has there been some multiple expansion helping the share price rise over the past 5 years? For instance, has the P ratio been climbing, price to sales ratio been climbing, price to operating cash flow been rising as well? Now, the first step in determining whether this company is a buy, hold, or sell based off valuation reasoning is just looking at some of the valuation metrics at the close of trading on November 19, when the share price of Oz Minerals was $26.03. Price to operating cash flow was 10, and in isolation, that's neither high nor low. I would prefer that a little bit lower, but that's in a pretty reasonable range. PE ratio at 21.4 does seem a little bit high for a mining company, but it's not as high as it was just 6 months ago. Price to sales ratio 4.9, again, that's a little bit high for a mining company. And the price to book ratio at 2.5, again, a little bit high for a mining company. So right now, I would say, just based off these valuation metrics in isolation, they do seem a little bit high. So I wouldn't say Oz Minerals is a screaming buy based just off these valuation. One way you can determine if a share price has been increasing because of multiple expansion is just look at these valuation metrics through time. Have they been climbing? If you see the price to sales, price to book, PE ratio, and price to operating cash flow climbing through time, that's telling us there is a little bit of multiple expansion happening. So in this chart, I've just included the price of Oz Minerals, the price to sales ratio, price to book, and the price to operating cash flow. I have not included the PE ratio simply because the company was unprofitable in 1 year. It just distorted this chart a little bit too much for my liking. So what I'm looking for here is just determining if the price to book, price to sales, and the price to operating cash flow have been climbing. And definitely the price to sales and the price to book have been climbing since 2016. Between 2011 and 2016, they were both going sideways or even decreasing through time. Price to operating cash flow was going sideways up until the start of this year, where we did see it climb quite rapidly as the share price climbed. But once the company released the half-year results, you see a massive decrease in the price to operating cash flow. So the market was expecting some really good half-year results, and that's why we saw the price to operating cash flow drop significantly upon the release of the half-year results for Oz Minerals. In fact, the price to operating cash flow went back down to its long-term trend. Another way of determining whether there's been any multiple expansion happening with the company's share price is just comparing the financial expansion metrics like revenue, profit, and operating cash flow, and just compare the growth rates of those three to the share price and market cap. And if the share price and market cap have been growing quicker than revenue, profit, and operating cash flow, there has been some multiple expansion happening. If it's been growing slower than revenue, profit, and operating cash flow, there's been some multiple contraction happening. And my favorite scenario by far is a company that has some multiple expansion, so revenue, profit, and operating cash flow growing, but there's been multiple contraction happening. Its share price and market cap have been growing slower than revenue, profit, and operating cash flow. And the reason that is my favorite scenario is simply because there's a greater chance that that company will outperform the market over a certain period of time. But for Oz Minerals, over the last 9.5 years, revenue, profit, and operating cash flow have been growing slower than the share price and market cap. For instance, operating cash flow has been growing at 3% per year, revenue at 5% per year, while the share price and market cap have been growing roughly at 11% per year, which means there has been some multiple expansion with Oz Minerals over the past 9.5 years, and that has helped drive the share price higher. Now let's have a look at whether there's been multiple expansion happening with Oz Minerals over the last four and a half years. And the reason I want to look at that is because we have seen the financial expansion of this company accelerate. So revenue growing at 8.3% per year over the last 4.5 years. Profit 15% per year. Operating cash flow 11%. Let's compare that to share price and market cap. And we see here that the share price and market cap have been growing between about 13.4% and 14.7%, roughly in line with how the profit has been growing. So it's fair to say there's been very little multiple expansion happening over the last 4.5 years, which is a little bit different than what we saw in the charts, but that was based mostly of price to sales and price to book. When we looked at price to operating cash flow, there was a little bit of multiple expansion, but not a lot. But when we compare profit growth to share price and market cap growth over the past 4.5 years, there's been no multiple expansion happening at all, which tells us that the reason this company's share price has been growing is because of financial expansion. And that is also telling us there is actually more room for the share price to grow, particularly if there's a little bit more hype built up in this company from the market. So overall, because of what's been happening in the last 4.5 years, I'm going to have to put out a buy for Oz Minerals on valuation grounds. One thing I have not looked at in this video or any of these videos in this buy, hold, or sell video series is just the future potential of a company. And to be honest here, the main driving force of the share price of a company is how the market expects the company to perform in the next 5 to 10 years. And if Oz Minerals have a lot of potential mines that will go into production during that time period, more than likely the market will start paying a premium for the company's share. So I have not looked at that at all. I do know this company does have mines or potential mines in the future throughout the world, not only Australia, which is something I didn't know before. They have mines in Australia, Brazil, and they have projects throughout the world. And if any of those potential projects are highly successful, that should drive the share price of this company higher from where it is right now. If you have any questions about this company, or you know a lot more about this company and you'd like to show the world what you think about Oz Minerals, leave a comment in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.